crude oil here. We've got some heavy supply, not a lot of easy trading in here, right? You've got heavy supply coming in. We see that. It kind of dries up as we go down. No real climactic action here. This is supply over demand, no question about that. We rally up. Look at as we go up, the volume comes off, the volume falls off, and then we go sideways. Well, we do get a trade set up in here. So I'm going to blow this up on the next chart so we can see that. So here was the big supply coming down, and then the rally up with the volume coming off. Sometimes when you compress charts a little bit, they actually open up for you. Notice that we just have kind of choppiness in here, and really what we've got is an upthrust in a downtrend. And we get a nice one here. You can short right on this bar here. So right on the close of this, on the close of that bar. Or you can wait if you want until it gets taken out. You pick your poison. And we go down to the low of the day. We take out the low of the upthrust. And notice that when we do take out the low, we don't see, and this is the first time we see any demand coming in at all. And so we would expect demand to come in. And if we take this out and we get this kind of price action here where it's pretty strong going down, then you put a limit order a tick or two above this, right? If this is 50.85, you might put this in at 87 or 88 in here, and that's where you want to get taken out. And and in this case you do. You get taken out very nicely. So now we're into Wednesday, and now we're about to go into Wednesday gold. I hope you can see that there are at least one, if not two or three trade setups in every market every day. Well, we didn't get one in S&Ps there, right? But we certainly do get these nice trade setups, and they're pretty defined in here. So we've got, trend coming down here with lows and lower highs, and even though this is a price bar here and it's a fast drop, we're still in downtrending conditions, and we still have a sweet spot or minor upthrust, call it what you like, trade setup that occurs in here. And again, note that the volume dries up down here as we try to go higher. And we've got a lot of price bar overlap, tremendous amount. We can draw a line through here and hit every single bar. That's all that is price bar overlap. So there's no ability to rally, and we're just waiting for an opportunity to go short. You might have jumped in and a little prematurely for this market, but you can't be blamed for it here. I mean, that would be okay. Just have your stop at a decent place, and you might have gotten stopped out. But you can either get in on this or you can get in on the test. There's a test bar. Now, I know this is going to be confusing for some of you. Tests can be bars, okay? Not just swings or lengths. And this test is a picture-perfect test. This is classic or textbook for a couple of reasons. A test bar has got to occur in the right place, and this is the right place. It's testing the resistance here, okay? And the resistance is illustrated by the red line, the red dashed line. It is an up bar, meaning that it closes up higher than the prior close, or the close of the prior bar, okay? So the test bar is an up bar, the next bar is a down bar, this is a down bar closing below the close of the prior bar, down bar, up bar, level bar, down bar, up bar, level bar, up bar, down bar, up bar, okay? You can go back through the tape and see that if that confuses you at all. So it's an up bar. Test on a bar, we typically want to see them be up bars. It has very low volume. That's a strong criterion. And also, it's inside the range of the prior bar. So there's no, there's no flow to the upside. It's just, it tries to go up and kind of dies right in the middle of the bar. So you can take that either on the close or as the low is taken out. You can take that bar. We come down, we get a big spike in volume. This is a bottom reversal. This is a sign of strength. We had a minor one here. It didn't hold. This one does hold. Sometimes they don't. Sometimes, and we get two of them in a row. This, for those of you who understand Wyckoff, this can be considered preliminary demand. This is climactic action, so to speak. So we rally up, and we get a long, extended. Remember, we talked about downtrends. We don't want to take springs in downtrends unless the downtrend has extended itself for a bit, and this one does. And we get this must have been a news event, would be my guess. We get a high volatility bar, but it closes above the low. On all that volume, why didn't this thing continue to go down? And why did the next bar, if all this volume and activity was selling, why did the next bar also close level to the prior bar and above this little spring, this little swing low, setting up a spring? We rally up. We get a test bar in here. Now this is a down bar. In VSA terms, let me clarify something. I call these tests, this would be called no demand. Okay, this would be a no demand bar. Tom Williams created the idea of no demand. Wyckoff did not. Tom just wanted to differentiate between tests to the upside and tests to the downside. He thought it was confusing for people to learn it, and so he called them no demand, a little more descriptive. That's the only difference, is just the name. And as I said, it doesn't matter what you call these things as long as you understand what they are. So here we have narrow range, down bar, right? Low volume. We get a nice response to that. And notice, where are we testing? We're testing this supply. All makes sense. We get another test bar here. It's narrow range, it's inside, it's a down bar, low volume. So as these markets are rallying above the tests, you can buy them, or you can buy them on the tests. So here we have an upthrust and a spring in an extended trading range. Let's see some comments here coming in. Isn't this trade in gold Wednesday, 9 o'clock a.m. also a great sweet spot trade after the big drop? 9 o'clock a.m. Yeah, it is. It is. Technically, it's an upthrust, but there's not really space between the bar that sets up the resistance and the upthrust. That's right. So, yes, it's a sweet spot trade, or, as I said, a minor upthrust. You can consider it a minor upthrust. We would call this a hidden upthrust in VSA terms if we wanted to get that technical about it, but I don't really want to do that. For FOMC on Wednesday at 1, yeah, it would be 2 o'clock in my time. So yeah, I'm sure that was news. Okay, let's push on to go to Thursday's trading. But two nice trades that occurred there on that day. And around the FOMC and stuff, the technicals, let's go back to that for a second. So this is the Federal Market Open Committee, right? The technicals, 90% of the time, the technicals are going to tell you they're not going to do you wrong. I see this over and over and over again with news-related items. Sometimes the market goes a little deeper than you would expect. You would have expected the market to come down through here. So this, given that there was an FOMC, right? But the fact that it didn't indicates there's more strength to the market than what this bar suggests. You have to be able to think through some of the news-related items sometimes.